Are you ready for some unsettling news about the 2024 housing market? Experts warn about rising risks that mirror the lead-up to the 2008 crisis.
Exactly. We're diving deep with insights from influential voices like Henrik Zeberg, RFK Jr., and Robert Kiyosaki, who share their perspectives on this climate.
We'll also tackle what's happening with current home sales and the struggles of sellers in this tough market. Welcome to Financial Insights in Minutes, your quick guide to understanding the most pressing financial discussions today. But stick around as we summarize key takeaways from today's captivating financial videos.
Let's jump in, starting with Henrik Zeberg's alarming predictions about our economic future.
Economic warning signs are flashing everywhere. Today, we're diving into a pressing discussion on whether we might face an economic crisis as severe as or worse than 2008.
Henrik Zeberg, our guest, is no ordinary economist. He brings a wealth of experience analyzing these critical market conditions and warns us about the potential pitfalls ahead.
So what's the essence of Henrik's argument regarding the economy?
The crux of Henrik's thesis revolves around the idea that current economic conditions mirror those before the 2008 crash. He warned that inflated asset prices manipulated by extensive quantitative easing are creating a bubble poised to burst.
What about the average consumer's situation today?
Henrik highlights that Americans are really feeling the pinch. Retail sales are stagnant, and many are struggling with significant credit card debt.
Now, what indicators are signaling trouble ahead?
The yield curve inversion, when short-term interest rates exceed long-term ones, has reached a historic length. This often foreshadows economic downturns.
And about this economic bubble, what can we say?
The current asset bubble is alarming. For example, the market capitalization to GDP ratio is at unprecedented levels, a clear sign of overvaluation.
What does Henrik say about the central bank's role in this situation?
Henrik argues that the Fed's prolonged stimulus through low interest rates has created artificial growth, but now risks significant economic repercussions.
So, when does Henrik predict the recession will actually hit?
Henrik forecasts that a recession could officially start by December 2023, suggesting a turbulent market leading up to it.
What dire consequence does Henrik foresee in the employment sector?
Massive layoffs could lead to rising unemployment rates, further straining the economy as consumer spending starts to slow.
And what about asset prices? What does Henrik suggest?
Henrik warns that asset prices across the board, including stocks and cryptocurrencies, could face dramatic corrections as market realities dawn.
To conclude this pressing discussion, what should viewers take away from Henrik's insights?
It's clear, proactive financial planning and preparedness are critical. Understanding market signals and consumer behavior will be vital in the months ahead.
For those considering investments, what advice does Henrik give?
Henrik reiterates that while gold and silver are promising long-term, short-term volatility is expected. Smart investing requires resilience and foresight.
As we close, what do you think the next economic phase will look like?
Join the conversation. Share your thoughts below on these trends and strategies for preparing for economic shifts. Now,
let's dive right into today's engaging discussion on the dire state of America with influential voices RFK Jr. and Robert Kiyosaki. What are the shifting tides within the Democratic Party, and are our foundational values at risk?
Absolutely. The guests elucidate the current political landscape, emphasizing how the Democratic Party has strayed from its roots, leaving many citizens concerned.
So what's the crux of their argument? How have America's political values shifted?
At the heart of the discussion is the assertion that the Democratic Party, once a beacon of freedom of speech and individual rights, has transmuted into a vehicle for elite and corporate agendas, compromising the very principles it once stood for.
Let's examine those foundational values. How did the party embody the essence of democracy?
Historically, the Democratic Party championed ideals such as free speech and peace, emphasizing humanitarian efforts under leaders like JFK, who wanted America recognized as a nation of peace rather than military force.
Now, what's this about the party shifting towards corporate interests?
Today, many feel the Democratic Party has become aligned with Wall Street and big corporations, contributing to the suppression of dissenting voices and promoting censorship under the guise of public service.
What about these rising concerns over censorship? What's going on there?
Censorship is at a boiling point. There's an alarming trend where political leaders advocate for controlling the narrative, raising questions about the consequences of stifling free speech in a democracy.
So looking ahead, what do experts predict about future elections?
There's a strong likelihood that ongoing disillusionment among voters will lead to unexpected shifts in election outcomes, challenging the traditional political dynamics we've come to expect in America.
And what about the global implications of these censorship trends?
We might just see these patterns of censorship mirror other nations, leading to a palpable decline in democratic values as dissent is quashed worldwide.
To sum it up, what are the big takeaways from this discussion?
The discussions led by RFK Jr. and Robert Kiyosaki raise critical questions about the Democratic Party's alignment away from its roots, prompting a need for vigilance to protect our democracy from erosion, while emphasizing the urgency to reclaim the core values.
As we wrap up, let's discuss citizen engagement. What do you think needs to happen next?
Citizens must become active participants, questioning authority and advocating for democratic freedoms to ensure that the wrongdoing doesn't slip through the cracks. Your voice matters.
Let's dive right in. Today's topic centers on the housing market pressure home sellers are feeling amidst a wait-and-see buyer mentality.
Absolutely. Homebuyers are holding out for prices to drop while sellers are becoming more willing to negotiate. It's a real tug of war.
What's at the heart of this issue? What's happening in the housing market right now?
The core thesis is that with a drop in contract signings to the lowest level on record, sellers are feeling squeezed. Buyers are hesitant, waiting for prices to dip significantly before committing.
Now let's talk details. What's driving those contract signing numbers?
The National Association of Realtors reports a staggering 5.5% drop in July signings. Yikes, that's a year-on-year decline of 8.5%. Can you believe it?
What about inventory levels?
Good news for buyers. Inventory has surged by 20% year over year. Sellers are starting to budge on their asking prices. It's a shift.
What are the economic factors here?
Affordability is dominating discussions. Many potential buyers are waiting for the right moment. Plus, uncertainty around upcoming elections adds to the hesitation.
Looking forward, what can we predict for the market?
There's speculation that the Federal Reserve might introduce rate cuts, which could invigorate a sluggish market. More buyers could come out to play.
And what about shifts in buyer behavior?
If prices stabilize, we might see buyers eager to jump back into the market, leading to faster sales.
So, what's the overall takeaway from today's discussion?
Buyers and sellers alike must stay nimble. With changing prices and interest rates, it's essential to stay informed and ready to make moves when the time is right.
What do you think will happen next?
That's the million-dollar question. Keep an eye out, as these dynamics may change swiftly. Don't forget to share your thoughts below.
Let's dive right in and explore the latest trends in the housing market based on a recent report from Redfin.
Here's the scoop. Despite falling mortgage rates, home sales have yet to show any significant improvement.
What's the core message we're getting from Redfin's insights?
The thesis reveals that despite an increase in inventory and record high price reductions, pending home sales have hit a new low, worse than during the Great Recession.
What are the current market conditions saying?
We see an unprecedented rise in inventory and price cuts, yet buyers remain cautious.
And how are pending home sales looking?
Pending home sales have plummeted, reaching a level not seen since the data began in 2001.
What about buyer behavior in this market?
Buyers are hesitating, mostly due to uncertainty surrounding new regulations and the political climate.
How are mortgage rates affecting the market?
Although rates have dropped, this isn't translating to increased purchasing activity, putting buyers in a holding pattern.
Are there regional differences we should consider?
Absolutely. The Northeast experienced slight gains, while the South and Midwest faced significant setbacks.
What does Redfin predict for the future of home sales?
We could see a prolonged slump unless mortgage rates drop significantly, prompting more buyers to make a move.
How will the upcoming elections factor into all of this?
Elections may create further uncertainty, impacting buyer decisions, especially if significant policy changes are on the horizon.
So what should buyers take away from all this?
Buyers need to stay informed. While the current market is challenging, it's essential to consider both short-term and long-term strategies.
As we wrap up, what's your take on the future of the housing market? Will rates drop more or remain steady?
We want to hear your thoughts. Will waiting yield better opportunities, or should buyers act now?
So, as we close today's discussion, we gathered some alarming insights from our featured experts about the housing market's future.
Indeed, Henrik Zeberg drew powerful parallels to 2008, suggesting we may be facing stormy economic seas again.
And while RFK Jr. touched on the political landscape impacting these conditions, Robert Kiyosaki instilled a message about preparing personally.
Then Jason Walter highlighted that despite falling mortgage rates, home sales aren't picking up as buyers are hoping for lower prices.
That's a great summary. As the economic environment continues to shift, understanding these dynamics is key.
Thank you for tuning in. Remember to follow Financial Insights in Minutes.
Remember to like and subscribe. If you have ideas for more, thanks for watching Financial Insights in Minutes for September 2nd, 2024. If you found this time-saving content useful and want to support the channel, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.